Hey guys, it's your boy Trader Architect, and I'm here to show you how you can grow a small account and even pass funded challenges using a simple strategy that I developed and backtested myself. Okay, anyway, let's jump right into it. If you haven't already, please hit the subscribe button and help us on our way to 500 subscribers. That's right, 500. So there are three things we're going to need in order to successfully execute this strategy. The first one is the ability to determine short-term price action using the last break of structure before your session. The second is very important, which is timing. Personally, I set my session from 6:30 a.m. to 10:13 a.m. GMT +1. Lastly, you're going to need a rudimentary understanding of displacement and fair value gaps. All right, let's take the first example. So we're coming into the London session here, okay? And the first thing we're going to notice is that price is bullish. So this was our last break of structure and it was to the upside. That means that our bias for the day is bullish, okay? The next thing we do is we scale down to the 5-minute time frame. And on the 5-minute time frame, we're looking for the low that's formed during the London session to sweep an already existing low. Okay, so this is the London session, right? This is an already existing low, right? Right. This is an already existing low, but we didn't swim this low. Price just went on, right? But at some point during the session, we finally swept a low. So the moment we swim this low, the next thing we knew is that we scaled down to the 1-minute time frame. Now I want you to pay close attention at this point because this is a fair value gap. I need you to enter when you see a bullish, impulsive fair value gap in a bullish scenario, okay? If this third candle during the formation of the fair value gap were bearish, I'd be very careful about entering. In fact, I wouldn't enter, okay? Or at the very least, I would have my risk. But this is a very clear entry opportunity. The reason is we have formed a fair value gap and all three candles in the formation of the fair value gap are clearly bullish. So if you're someone who likes limit orders, you could place a limit order for price to potentially come back into this fair value gap and then move. Personally, I prefer manual executions, all right? So I would actually take this trade on the close of the third candle, forming the fair value gap, all right? Now, usually, I like to be very, 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 very generous with my stop. Don't be stingy. Don't. There's no point. There's no need even, okay? 1:3 every single trade. Let's see how this plays out. All right, so that's 1:3 secured for this particular day. This was on the 14th of August. Let's move over to the 15th of August and see what happens. Okay, so this is the 15th of August, right? And the first thing we're going to notice coming into this session is that, so the first thing we do is determine the last break of structure on the 1 hour, which was to the downside. So we're bearish for this particular session, okay? Then we scale down to the 5-minute time frame. Remember, we are looking for an already existing high to get taken during the London session, right? After the London session has opened. So we've opened and this is our nearest existing high. So we're looking to sweep that high. Okay, so we swept the high, we scale down to the 1 minute, and we're looking for the formation of a fair value gap that indicates displacement. All right? Right, and we have that. Okay, we don't have that yet. Not yet. Not yet. Not yet. What? Yeah, okay. I like this. So at this point, we are free to enter. The reason is I'm not seeing any bullish candle, right? If anything, I'm seeing this pin bar here, meaning that this candle began to form as a bullish candle, but then due to the impulse to the downside, closed as a pin bar. So I am satisfied to enter off of this fair value gap. Remember, you can either place a limit order for price to come back into the fair value gap and move, or if you like manual executions like I do, you could just enter, man. Just enter. Okay. Remember, be generous with your stop loss. You can take it to 5 pips if you want. I think that's okay. Yeah, so we go for a 1:3 as per usual. All right. So let's just go to the 5-minute time frame, see how this plays out. This trade took us far beyond the London session. Okay, so that's 6 hours in 2 days. Just saying, that just happened. All right, so let's just go over to the final day and see exactly what we have. Oh, also, see, that's really sad because we can't go any further. Okay, guys, so we're just going to look at the price action for today on my trading view. And coming into today, the first thing we do is we look at what the last break of structure was before the London session. So we know that for today, we're bullish. We then scale down to the 5-minute time frame. Remember, what are we looking for? We're looking for an already existing low outside of the London session to get swept. So we actually swept our first low at this point. When we scale down to the 1-minute time frame, we're going to see that, okay, so technically we did get a setup here, okay? So following the system, we should have taken this trade and we would have lost, which is completely okay because risk management wise, using this strategy, I give myself a maximum of 2 trades per day, per session, which is technically per day. So you can actually take the re-entry, and if you lose that, then you're done for the day. Don't take more than 2 setups though. All right. So losing this setup, what it meant was that price had swept a new low, right? And upon sweeping that low, we simply scale down to the 1-minute time frame and look for our entry again. Now this looks like an even cleaner entry, right? We have a fair value gap. We have 3 bullish candles forming the fair value gap. This is a very good sign. So we simply enter off of that and we go for the usual 1:3, the usual suspect. And as you can see, this trade played out fair. Anyway, thanks for watching, guys. Please like, comment, subscribe.